The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
This is Denise Nostrom, CEO and founder of Diversified Financial Solutions. Now more than ever, investment advice is needed. Not just where best to invest your money, but why. Are you investing for your future retirement? Are you retired and looking to maximize your income? Are you maximizing your income and concerned with leaving money for your loved ones? Are you investing for your retirement at the same time saving for your children's education and at the same time saving to buy another home? Are the markets in line with your goals? Are your goals ever changing? Please contact me at 631-758-8691. That's 631-758-8691, or visit us at diversifiedfinancial.biz. For over 25 years, I have been helping individuals, families, and business owners navigate through all market conditions with only one goal in mind, my clients. Visit me at diversifiedfinancial.biz or call Denise Nostrom, founder of Diversified Financial Solutions, at 631-758-8691. That's 631-758-8691 for a conversation about my most important client, you. Hello, thank you for tuning in. You are listening to The Financial Chick Show, and I am The Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I am here live every Friday from 5:30 to 6 p.m. on 103.9 LI News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you have any questions on anything we discuss on this show, you can check out my website at financialchickshow.com. We are also on Facebook at Diversified Financial Solutions, so like our page to get updates and see what's happening. So, March has come and gone. Well, actually, I'm actually taping the show today, but you're going to hear this on Friday. So, March has come and gone, which means that the first quarter is now over. April is here, and your first quarter statements are going to hit your email or your mailbox sometime within the next week. So it's been a pretty good quarter. Everything should look pretty good overall. Maybe some of your tech stocks have taken a bit of a hit. They raged last year and were doing really well. So this quarter they were a little bit off, but wow, right? How fast was that? Pretty quick. So as I said, today is Good Friday. This is one of the most interesting holidays because banks and the post offices are open, but the stock market is closed. It is always a special day to be off. Because typically I'm usually working while most people are off. So having off on Good Friday while most people are still working is really kind of a nice change. It's also kind of cool because it typically falls around my birthday, which is actually on Monday. So, fun fact, the New York Stock Exchange has been closed on the Friday before Easter every year since 1889. A little bit of a mess up there. So since 1889, with only two exceptions in 1906 and 1907. The holiday is a quirky one for financial markets in the U.S. because Good Friday is not a federal holiday, as I kind of alluded to before. It's actually one of the few holidays that isn't both a Wall Street and a federal holiday. So it's kind of an interesting thing. Like I said, it's just kind of a nice change to get those days off because typically I'm working when people are off. So it's nice. Another thing that we need to know about is that tax day is coming soon. Not that you didn't know that already. The due date for filing is May 17th, but don't forget any money's due and quarterly taxes are still due April 14th. I keep saying I was April 15th, excuse me. I keep saying this because I need to keep reminding myself of this. And remember that you can actually still put money away into your IRA or Roth IRA for 2020 until May 17th too. So if you don't have one or not sure how to start one, give my office a call at 631-758-8691 or visit my website, Financial Chick Show, to set up your free consultation. And we can go over exactly why having an IRA or a Roth IRA can work into your financial situation and get you more prepared for retirement. So since it's Good Friday, I decided to share some facts about Good Friday from a company called Facty. So the first thing is, what is Good Friday according to Christians? In Christianity, Good Friday is one of the most important days of the year. This holiday celebrates the beginning of Jesus' biggest miracle. For many Christians, the weekend beginning with Good Friday is the most important few days ever to take place in history. After all, Good Friday is the day on which Jesus sacrificed himself for our sins. He was flogged, tortured, and crucified, giving his life to save everyone else's. It's also a day of fasting, penance, and thoughtfulness. And why is it called Good Friday? Well, what happened on Good Friday doesn't particularly sound very good to anyone, right? There are several theories as to why Good Friday is actually called Good Friday. Two of them are translative errors that have been passed down through the years. For example, in one instance, the word good was actually meant to mean holy. Good Friday was the holy day in which Jesus sacrificed himself. In another theory, it was originally God's Friday. So it kind of got changed over time. Seems like when we went through Ellis Island, right, where we changed names and that type of thing. So history, I guess, does morph and change itself in some way. So as I mentioned before, is Good Friday a holiday? Good Friday is a Christian holiday, but not always a federal holiday. There are several states, however, in which Good Friday is considered a holiday, and therefore banks and stock markets are closed for business. As well as in these 12 states, there are plenty of countries around the world in which work is called off, school is called off, and sometimes stores are actually even closed. What does the Bible say about Good Friday? Several Bible verses refer to Good Friday. It feels somehow impossible for such a momentous event as the crucifixion and resurrection to occur without being noted in Scripture. So it only goes without saying that a lot of Jesus' disciples were inspired to write about such a terrible day. From Mark and Matthew through Isaiah and John, the apostles wrote everything down about the Holy Week. And is Good Friday part of Easter? Well, Good Friday is a part of Easter. Although Good Friday has its origins in Christianity, Easter itself allegedly began with the pagans. A lot of Easter traditions we practice today might actually come from those ancient pagan ones. According to the Venerable Bede in the 7th century, the name Easter comes from the pagan goddess of fertility, Oestre. Eggs symbolize fertility and new life, and rabbits are extremely fertile. Although there are still people who disagree on just what Easter, or just where Easter came from at this point. And what are some Good Friday traditions as you're off today or had off today? Maybe you've done some of them. Many across the world celebrate Good Friday and have their own traditions. Where Easter Sunday includes egg hunts and Easter bunnies, Good Friday has more somber celebrations. Countries around the globe from Bermuda to Israel have their own traditions. Bermuda's tradition is one of the most unique. Every Good Friday, locals celebrate by flying kites that symbolize Christ's ascension. Another notable tradition is in Jerusalem, where Jesus was crucified. Many Christians walk the exact path as Jesus did on that final day. So it's a little bit different now with, I know with my church, we have to make a reservation to go to church. So it's not as easily done, although possible. But, COVID definitely has been interesting. But, as we said, things are definitely getting better, and we're moving right along. So one thing that came out this week that I read, and this is as per the Federal Reserve, basically status quo for 2 more years, meaning that the most recent meeting of the Fed, ending on March 17th of this year, 2021, saying with their interest rate forecast, they're calling for no interest rate hikes by the Fed until at least 2023. So what do you think? What do you think about that? Do you think it's good news? Is it bad news? And what do you do? What do you do about that? This is probably the biggest calls that I'm getting right now. People are having CDs coming due. They've put their stimulus money into the bank. Maybe they're on unemployment and they've banked some money, which is awesome. But they're saying, wow, I finally have built some money up, but now I'm not making any money on it. So is it good or bad news? Well, it's really both. It's good and bad news. Good news is, one, that rates will continue to stay low, so mortgage rates will be staying low. So have you refinanced your house? If not, you still have time. There's still that window of opportunity. Maybe you're buying a house. Now, depending on where you buy the house prices are elevated in many areas, but you can get a great mortgage rate. I just know, actually, got an email from a client. She's going to be moving from New York to Maryland. And so great time for her in terms of the mortgage and selling her home here. and buying down in Maryland. So there is windows of opportunity, and you want to take them while they're here. So that's why I say it's kind of a straddle between good and bad news, but let's talk about the good. With rates being low, you can also obtain loans at lower rates as well. Personal loans, car loans, or the possibility of consolidating debt to get that stress off your back. So I'm not intimating taking on more debt because that's not something we ever want to do. But we know there's certain times that we need to do it. You need a car. I love the fact of consolidating debt. If you have high interest rate debt, this is the time. This is the window of opportunity. Sit down with somebody, come into my office, get a consultation. We'll talk about ways to put more money back in your pocket and get that burden off your back. So you want to take advantage of the opportunity, the window of opportunity, because like I said, it does not last forever. So this is your financial chick, Denise Nostrom. The company's Diversified Financial Solutions. I help you look for financial solutions when you feel like there are none. Feel free to contact me at 631-758-8691. We're closing in on the commercial break, so stay tuned. We're going to talk more about the Fed saying that they're going to keep interest rates low until 2023. So that's a pretty long time, and we work hard for our money, right? We want to make all of our money work as hard as well. So looking for alternatives to those low interest rates. So stay tuned. I'll see you after the break. Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. We are here to help you on your financial journey. Over the years, things change, and we are here to help you navigate all of those changes. So before the break, I talked about the Fed as far as the recent meeting back on March 17th, that their interest rate forecast is calling for no interest rate hikes until at least 2023. So, we're in 2021, looking at about a good 2 years. So what do you do? There's good news and bad news to this. So before the break, we talked about some of the good news is that, we could look at mortgage rates staying low. So if you haven't refinanced, this is a great time to do it. We just refinanced. We were at about 4.25%, I guess, and we were able to get under 3% on a home that we own, and it's a great opportunity to put more money back in your pocket. Whether you're going for a 15 or a 30, really does. It's kind of based on your situation. That's why when I sit down with my clients or you come in for a consultation, we could talk about what works best for you. Sometimes the rule of thumb, just go for the 15, it's shorter, or 30. It depends on what your situation is, your income. Sometimes doing the 30 gives you that opportunity. You could always pay it off sooner. And right now, what's interesting, the spread between the 15 and the 30 are very close. So you do have that opportunity. Sometimes it's a no-brainer where the 15 is just a better rate overall. So explore that a little bit more. Buying a house. If you're buying a house right now, typically very, very good rates to get into that home. And, although the prices are higher, the beauty of it is that with the refinancing or getting a low rate, you will have that low rate for a long time. The house price is a little bit higher, but if you stay in the house for a long time, you should do well over time. So, and then of course, consolidating debt. Maybe over the pandemic, situations had incurred that you needed to take on some debt or maybe a loan or whatever the case may be, and maybe they're at higher rates. So definitely look at those items, make a spreadsheet of credit cards that you have, rates, minimum payments. Bring that into the office. We can go over that and see a strategy to help you take advantage of these low interest rates. And the bottom line is keeping more of what you earn. That's really what the goal is, and putting it toward the goals that you want to do. So, basically, let's talk about some of the bad news now. So the bad news is that rates being so low means that you get little to no interest on your savings and money market accounts, and CDs are not offering all that much either. So you need to keep money in the bank, obviously, to pay your bills and have a cash reserve for emergencies or opportunities. But what else can you do? What's next? Once you know what your number is, I always say to my clients, listen, what is your number that makes you feel comfortable and enables you to sleep at night? Maybe you like to keep $10,000 in the bank, $5,000, $4,000, $40,000, $50,000. Everybody has a different number. Working with so many clients, everybody has their number. So that's kind of a good gauge. So when we have our meetings, we talk about that. All right, where are you at? So Maybe it's 20. We'll just use 20 as a figure. And maybe they have 30 right now. So now we know that excess money that won't, that they can sleep at night because they know they have their 20 in there, can be used for other purposes. So what's something you look at? Bonds are looking a little bit better right now, and basically because of the Federal Reserve. It's like a seesaw effect. So when rates are very high, bond values are very low. When rates are low, the bond values are high. But you're getting into a situation where it's a confluence of a lot of different things. The market, in some cases, is pretty high. People want security, right? You want to make sure that you know your money's secure and you're not going to have a lot of volatility. Bonds delivers that. Now, you're not going to be hitting the stars like if you hit a good stock that makes a good return, but the bonds will give you that peace of mind and pay you a better rate on the interest as opposed to the bank. So for example, if you put your money into an investment grade bond fund and obtain an SEC 30-day yield, it's going to be between like 1 or 2%. Now again, you're not like, wow, this is like awesome. But when you look at the bank, what are you getting? 0.1? And maybe in all facts, it's really kind of 0% when you look at it, because then once you pay tax on that wonderful interest that you get, it's pretty much negative numbers. And then what about the fact if maybe you don't want to pay tax on monthly distributions? A lot of my clients we're using now is tax-free municipal bonds, whether you use a bond fund or individual municipal bonds. And they're going to earn pretty similar, about that 1 to 2% yield. But the beauty of that, you don't have to pay federal or state taxes on the earnings. This is such a powerful thing, especially with all the talk about taxes going up, and you think it may not affect you, but with prices of groceries going up, these are all taxes. This is all stuff that we need to make our money work as hard as it can. So not sure what a municipal bond fund is or a municipal bond is or what a bond is at all? Come into my office. Part of what I do is education. It's really important for me to know that my clients know what they're investing in. Now, not that you're going to walk out and have a master's in finance, but having a good familiarity, and every time that we meet and we get together, we always go through things. So over time, I could bet you, my last dollar that my clients would be like, wow, like when I first started, I really had no idea what I was doing. But as I every year when I met and I started seeing the statements and doing these various things and participating in the meetings with Denise, the financial chick, I get to know a little bit more about all of these items. So it's that comfort, and you should know what your money's doing. There's the scariest things when I have people come into my office, maybe for a second opinion, or maybe, they just have an account with another advisor and they say, I really don't even know what it is. Like, that's scary. I mean, would you ever buy a car without knowing, the car's going to get you from A to B, or buying a house that, why do you get an engineer's report? You get an engineer's report to know that once you buy that house, it's not going to fall apart or fall down around you. So knowing what you have, this is your money. This is your biggest part of your situation, and what's going to get you through the day to day and get you through educating your kids and getting you through retirement. So it's really, really important. So, maybe you don't want to take on extra risk, right? So now you may want to move that cash and move it into something, some of those maturing CDs or excess cash, into what's called a fixed index annuity. Here you cannot lose money, but you could participate in market gains without investing in the stock market. So rather, you're betting on the rise of a stock market index with a cap. So it's a little bit of a complicated type of situation, but the bottom line is that this is a great piece of a client's portfolio because they know they can't lose money. They're not going to shoot the stars. They're not going to hit, if a stock index does 30%, they're not going to get 30%. But you know what? If we set it up right, and which I do with my clients, you're going to have some money in the markets. You'll have your secure and safe money, and you'll have your cash. So you're looking at all different things. You want to look at the overall return. You don't want to look at, I'm really aggressive here, or I'm really conservative here. You want to look at a full, complete portfolio. So incorporating a fixed index annuity is just really, again, giving you that peace of mind. And my show last week was what keeps you up at night. These are the different approaches that help you to sleep at night. So you feel like doing a little bit more? Why not purchase some individual stocks? With rates being so low, the dividend yields on some stocks today look so great. Pfizer, dividend yield of 4.4%. AT&T is at 6.77. ExxonMobil, 6.14. So again, I'm not intimating to become a stock jockey, but this is putting together a comprehensive investment strategy and not just doing one thing because you feel safe or you know how that works. stretch yourself. You can make money in any environment. It's just a matter of doing the research. So really, you want to evaluate where you are today. Are you putting money away in your retirement at work? Are you just doing that? Maybe it's time to spread out and put your money and diversify the types of investments that you have. I have clients that have their cash and they have their retirement plans at work, and that's awesome. I mean, if you've done that, you're definitely ahead of most people. But maybe having an investment portfolio on the side for things that happen, any opportunities, or just emergencies that may happen, in addition to your savings account. So we're coming to the end of the show, but I want to wish everybody a happy Easter and a happy Passover. Enjoy this time with your family and friends. I'm excited to have some guests with me this month here in April. Friday, April 16th, I'm thrilled to have the original member of the world-famous Village People, Felipe Rose, join me. He is the Indian, if you remember, with the loincloth and all of that. Hopefully he'll be fully dressed. Well, you're not going to see him, but you'll definitely hear from him. So it's going to be an awesome interview with him. Friday, April 23rd, I'll be joined by my friend and client, Mitch Weiss, the owner of MW Entertainment. He's going to talk about the business of Broadway and how we're going to segue back into getting New York open and getting to see those beautiful plays that we all love, and just having some entertainment as opposed to just, I guess, streaming Netflix. I don't do that, but I know many of you out there do. So I want to thank you so much for tuning in today. Again, this is The Financial Chick, the company's Diversified Financial Solutions. I'm here to help you find solutions when you feel there are none. I will see you next Friday.
Advisory services offered through Blackridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA, SIPC. Blackridge Asset Management and Diversified Financial Solutions are separate and independent entities from Peak Brokerage Services.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.